Good afternoon, this is Sean Golden with Golding & Golding, here to discuss the basics of the FBAR audit or examination, essentially the same thing, and they're becoming much more common as of lately. Brief background, who has to file the FBAR? Essentially, it's U.S. persons, which is U.S. citizens, legal permanent residents, foreign nationals who meet the substantial presence test, some dual status taxpayers. One thing to keep in mind is when you file the FBAR, let's say you're a U.S. person when you file the FBAR, and then a year later, you're no longer a U.S. person. That prior FBAR that you filed is still potentially subject to audit. So merely because you are no longer a U.S. person doesn't mean that the prior year reporting can't possibly still be subject to audit. It can. It doesn't matter if you live on the other end of the planet. The IRS doesn't really care. Technically, it's FinCEN is where you file the form, but the IRS is the government agency tasked with going after you for not doing it correctly. It's used to report foreign bank and financial accounts. That would include bank accounts, investment accounts, stock accounts, fund accounts, pensions, life insurance, etc., etc. There are some exceptions, but they're very rare. So for the most part, if you have a foreign account, foreign financial account, chances are that it is reportable. So, what is an FBAR audit? Essentially, it's the IRS's way of coming after you for not properly reporting, maybe not reporting at all. So, how does someone find themselves in this situation? Well, there's three main ways. The first way is a non-FBAR audit that expands. Is very common in the past 5 to 10 years. Typical situation with a new worldwide economy, right? Global expansion. Person in the United States is a consultant. They may have clients in various different countries. As any consultant will tell you, it is much easier to operate in each country in the local currency, right? So they open up 5 different accounts, one in Australia, one in India, one in Taiwan, and they have different accounts. Maybe when they first started, didn't cross their mind. Now, there's some good money in there. Maybe they got a new client, they get a big hit, and it's with a FATCA country, Foreign Account Tax Compliance Act, which is a separate reporting requirement, but that foreign financial institution ends up reporting to the IRS that Joe Jane has an account with $240,000 in it. It was never reported. Person gets an audit notice. Another common situation is offshore disclosure, and there's 2 ways that this happens. If someone does what's called Voluntary Disclosure Program, VDP, after OVDP ended, the traditional voluntary disclosure program, which was expanded at the end of 2018, early 2019, essentially requires the agent to audit each person who enters the program. Now, these are not necessarily, they're not unforeseen, because hopefully the person you hired at least went through this with you. They audit you, they ask you questions, you essentially claim willfulness when you enter the program, but you may be able to wiggle your way out of it or circumvent the willfulness penalty depending on the agent, their level of cooperation. But that's technically an audit. And then there's the third way, which is the IRS gets the information from someone else. In some situations, it could be an ex-business partner or intimate partner that is no longer fond of you, knows about your foreign accounts and has gone and offered you to the IRS. But that's not as common as just, if you look at the FBAR form, it might say, do you have a joint account, your signature authority? And so that person identifies you on the account because maybe they may not be part of the business anymore, but they're on the account. Or it's a sibling who just doesn't think twice about it, things like that. So it's very common for one of these sort of ways to spark an audit. Now, when you're in an audit, you're not going to be automatically penalized, but the IRS does like itself some FBAR penalties. And generally what happens is, whether it could be civil or criminal, 99% of the time it's going to be civil, and it can't be criminal from a civil audit. They have to refer you out to the special agents who come find you when you're not ready, and you go down 1,000 rabbit holes online researching that. It's 99% chance that's not going to happen to you. If it's a civil audit, it's generally going to be willfulness or non-willfulness. The willfulness penalties are 50% or 100,000, that's been adjusted for inflation. It's higher than that. It's about 132,000, I think now, or 50%, whatever's higher. So basically, that's the floor, the 132,000. If it's non-willful, then there's 4 levels: a penalty, a warning letter, one single $10,000 penalty, again adjusted for inflation, $10,000 per year, $10,000 per account per year, up to 50%, which is the willfulness penalty. Now, if that's the penalty that you get hit with, you can try to fight it. You can't typically go to tax court because it's not a tax. It's Article 30, section Title 31 instead of Title 26. But a lot of the agents are amenable. There's a lot of discretion to negotiate the penalties. If you want to take a look, the Internal Revenue Manual, I think it's section 4.26, kind of breaks down the basics. But the $10,000 penalty, for example, that's the max penalty, but just it's automatically assessed a lot of the time. So it starts out there, and then you try to mitigate it based on various mitigating factors if you qualify. If you haven't been penalized yet and you haven't been audited yet, it may benefit you to enter one of the programs, voluntary disclosure if you're willful, or at least can't certify under penalty of perjury that you're non-willful. There's the streamlined domestic for U.S. residents with foreign accounts, streamlined foreign for non-U.S. residents with foreign accounts, reasonable cause and delinquency, although unless it's delinquent FBAR specifically, the general delinquent international information return submission procedures has essentially morphed back into a plain old reasonable cause submission. We have lots of free information available on our main website, goldinglawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.